Morning, July 30th, 2019, Tuesday, 13 market moves, daily analysis, guys. Markets will break out higher on August 1st or 2nd. So basically, just as everyone thinks the top is in, market is about to break out. Now, the one thing we're focusing on today and the next couple of days, besides the fact that a lot of things that we mentioned yesterday are taking place, like the Federal Reserve, the job reports Friday, and all the stuff, infrastructure bill is going to be in focus. So we're going to introduce some infrastructure bill plays, and yes, they are going to be on the bullish side. Strong bullish reversal candles everywhere in tech on Monday yesterday. So as the tech sector was dropping crazily, had a pretty substantial reversal so far pre-market. Tech is dropping on low volume. Notably, Apple is barely dropping. Yesterday had a good move, couple of bucks, touching 210 level, which is very crucial because that gets Apple to about 215, which is where it went before announcing earnings last time. So the scenario we think is very likely is Apple hitting 220 after the earnings announcement, and we think it's going to outperform all the other stocks like Amazon and Microsoft, which had rather insignificant moves in relation to the earnings report. I think Apple is going to surprise everybody. Why Apple? Well, because it is a technology stock, but with possibility of talks with China this week, in combination with the fact that Apple is paying the dividend while the other growth stocks are not, I think that's probably the safest play in the tech sector. And clearly, if Apple manages to squeeze above the level of 215, the entire tech sector will rally on this news as well. So, but overall, we're not actually trading Apple unless it breaks the level of 215. So we're not putting any pre-earnings plays. We're going to look exactly to see which levels Apple will be striking tomorrow, and then putting on a trade if it's above 215. So overall, we are neutral on Apple. Currently trades pre-market about 208.50. Not a whole lot of room, even if it goes to 215, 220 level. There's not a whole lot of a trade there. But we do like VMC calls. EXP is reporting earnings tonight. So this is in the same sector with VMC. So we're going to be looking to see how EXP is going to be responding. Basically, we got a positive response in the XP. We're actually going to play VMC calls and MLM calls, and we are considering RH puts for today, guys. I'm going for this pretty quick. So here's the situation. Everybody thinks the top is in. I think they forgot to look at the weekly chart. Well, those were the prior three tops. It is clearly that at a level of 3,020, which we're trading slightly below that pre-market, we're actually way beyond the prior tops, even with a slight drop pre-market today. So what we're looking is a very symmetrical chart, which points to a bull run higher from here, guys. So I'm not sure all these people that are calling for the market top here, what exactly are they looking at? But they're definitely not looking at this chart here. There's various ways to actually also draw the cup with the handle here. And at this point, if we draw the cup with the handle here, guys, we are above the buy point. So, and even considering our historic analog points to a drop tomorrow before the rally begins on the 1st or the 2nd, even with that, we're still going to maintain this level nicely and break out from there. So here's the historic analog, just a quick glance again. We're fixing to head into the storm tomorrow. So for that reason, we are considering buying just a few puts like the RH puts. We're going to show you the chart in just a second. And then just remember that the magnitude of the move over the next 28 days could be maybe not as great as the one we've had in January of 2018. But nonetheless, there is going to be a move higher over the next 28 days. Then we're going to come in and we're going to position ourselves to short the market. So a lot of bears will get trapped. They're going to celebrate today and tomorrow for 2 days, and then they're going to get trapped on Thursday, Friday, and next week. So we're going to play this on the bear side and the bull side. So guys, get ready. Get your trading accounts ready. Let's roll. This is going to be a great opportunity for everybody. Remember, there is a 73% probability if we take out the last two cases of 2008 and 2001 when the Fed began to lower the interest rates too late in the cycle. If we take these two scenarios out, it gives us 90% probability of the markets moving higher after the rate cut announcement tomorrow. So the tunnel, however, points to the fact that we could easily revisit these levels. So yesterday we pointed out that we're getting back to these levels in the tunnel the third time, and the top part of the tunnel now, we're noticing this consistent behavior of profit taking. So every time we get to this level of 3,027, 3,029, 3,025, 3,025, look what happens. We have these fierce, rather rapid sell-offs that are coming in. Some are greater, like this one. This one was a small one here. This one was rather substantial. But overall, where could we go by Wednesday? So by Wednesday, we can easily hit a level of 3,000 to 329.87, which would coincide with the lower part of the tunnel that we actually drew yesterday. Now, notably, even though we're getting these sell-offs, which is typical characteristic of a top, yes, I don't mean to sound contradictory here, but important to observe what actually happens when we get this type of behavior. They're followed by immediate buying the dip behavior. This is why when the rate is going to be announced and we're calculating only a 0.25% cut, yes, the market's going to be unhappy for a moment. So the initial reaction will be lower to which level? To the lower part of the tunnel. The lower part of the tunnel, as we drew it here, puts us right under 3,000, which would coincide with the level of support right here, right here, right here, right here. Okay, so with that said, it wouldn't surprise me if we hit a level of 29.87. Now remember, we're talking about these levels, give or take a few points, so it could be 29.90, it could be 29.85, but right around this level. Now we may never actually get there. We could stall out at this level right here, 3,000, this level. They are going to try to protect this level seriously today. As far as Apple looks rather indifferent going into earnings. There's no any particular signals that tell us, hey, it's going to break out. So the chart is a combination of bullish and bearish things here. One of the most important things about Apple to consider, guys, is last time it reported earnings, you see this huge gap up, create this bearish candle, and then after that it had a consecutive series of drops. Now, I think we will get a reversal of this behavior, but one issue that we could see is Apple could just stall right here at 215. Facebook recently got pretty close to its all-time highs and then reversed, right? So we could see Apple do that. However, Apple's got a bit of a momentum going on because the money looks like it's been going into it. The chart looks rather positive. It does not look like 100% coupled to handle, but it does resemble it. So I think overall the chart is more bullish rather than bearish. However, with that said, nothing points out to like a huge gap up higher. There is a probability maybe we can go to 215, back down to 208, 209, maybe back to 205. Notably, there is too many options, too many put options that institutions are buying at a level of 195, 190, 200. There's a ton of puts. Puts outnumber the calls in Apple, which is kind of a rare situation. But just, you know, another way to look at this, instead of just following that trade, just to be a contrarian, may actually pay off here because they've had many reasons and plenty of time to be selling off Apple going into these earnings announcement, but the stock is rather steady and it did clear this major level of 205, right? 205, 206, so it is above that. As long as it holds this 205 level today, I think we would easily see Apple to 215. Now the question begins where actually, once we get to 215, what will actually take place there? If we clear the 215 level on strong volume by tomorrow, then it definitely does make sense to go ahead and buy calls, because Apple ultimately will be trading at 220 in no time if it clears the 215 level. Now, with that said, Apple will lift all the technology stocks, so instead of maybe trading Apple or building a huge position in Apple, it may make more sense to buy Amazon on the dip, buy BKNG on the dip. So there could be some greater potential stocks that will rally substantially higher in relation to the price move in Apple. So consider that on the back of your mind as we're trading in the next few days. So institutions are buying the semiconductor dip. This morning, NXPI reported earnings initially. The reaction was lower, hitting the 94 right after the earnings, and then moving to a level of 102. Now, this is very meaningful because semiconductor stocks are trading at all-time highs, and looks like some sellers are coming in. That's why you see dips. But the predominant behavior is they are buying the dips in semiconductor. So clearly, semiconductor and Apple have very positive correlation. Apple can take a lot of semiconductor stocks down, but so the behavior in semiconductor stock could actually point to where Apple is heading. So this is just another point why we are overall more bullish on Apple rather than bearish here, despite of the fact that the chart really doesn't point to either direction. So the fact that they're buying the dip in the semiconductor stocks actually tell us that Apple is likely have a high probability of moving higher rather than lower. Considering buying RH 145, 140 puts, pop and drop scenario is likely. RH rallied on the earnings report last earnings report, and this time it's reaching these levels at which historically it's got a high level of resistance, a range of 140, 150. All-time highs on RH are roughly about 160 bucks. So I think the downside here, yes, the quarter was good, but going further from here, I think there's going to be some questions. And so ideally, I'd like to wait to maybe if it pops to the level of 142, 145, that's where I would like to come in and buy the puts on RH, expecting a reversal intraday. Possibly this thing falling back to the level where it started, like 133, 134 would be the area I would target to close this thing out. So getting in, 142, 143, $10 drop, getting out, nice and easy. Now here's your infrastructure plays. VMC, Vulcan Materials, guys. Very strong consolidation, bullish crossover, a lot of stuff. Really strong volume around here, guys. Accumulation distribution supports the strong volume. So lots of good things. And MACD, even though it's bearish, it's showing some signs of wanting to cross to the bullish side. And the last time it made this bullish cross in the MACD, we had a nice strong move from 125 to 136. So $10 move. We could easily see this stock within an infrastructure play, possibly 150, 160. So expecting a strong breakout. Pick one of these guys. They're both great ways to play the infrastructure bill. And the chart almost looks identical. This one here at 223 is really good value right here, guys. The accumulation supports the volume, so very similar charts, showing some signs of MACD turning around as well. So both of them, pick one. I personally, like to go with the high price stocks. For some of you that have smaller account, the move in VMC could produce some substantial results, even if you buy it out of the money, like 140 calls or something like that. So these are really good stocks to consider, and they are positioned to break out. Yesterday's move on the 29th was a move 4. Initially, we dropped, and then we steadily went higher throughout the day, created a series of buy the dip, 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 but shit, buy the dip, and buy the dip. This is how the day ended. However, we're noticing a second day of confirmation. Going into the close, investors were actually getting scared and they were getting out, which is what accumulation distribution has shown us right here. So the highest volume came in into the close. We saw a sell-off, a distribution rather than accumulation. Let me show you how this looks on a 2-day sequence. 1-4 was the 2-day sequence, so clear move higher. And remember, we said that we're noticing a shift in the behavior. The day before, we saw a divergency. Basically, this divergence is now confirmed 2 days in a row, which makes perfect sense that today could be a down day, followed by another day lower, initial reaction lower, and this is how we can easily hit 29.87 on the S&P futures. And from there, we think the market is going to come, and guess what they want to do? Just like here, guys, they're going to do this. You know what that means by now. Buy the damn dip. Okay, so initial reaction lower, shift in the behavior, bearish divergence second day in a row. We picked up on that a day ago when it looked like we shifted from here. And even though we were going higher, right, we actually saw the accumulation was dropping. So very important stuff here. Points to a move lower before a move higher. Okay, 5-day sequence 78214. This is how it looks in the chart. Woo! Who would have thought that sequence like this would be a perfect image of a cup with a handle? Now, we've recently had a case of a cup with a handle on Amazon that didn't play out, right? It was supposed to break out. But interestingly, that since Amazon reported earnings, everybody and their mother-in-law has upgraded the stock. Now, the upgrades have not been substantially higher. We've seen a lot of we've seen a lot of analysts that had price targets of 2,000, 2,100 that raised those price targets to 2,200, 2,250, 2,300, 2,350, and so on. Not had any substantial price increases and targets to like 26, 2,700 or 3,000. However, we're seeing a lot of institutional investors are pointing out that the charts in Amazon look bullish. So maybe what we'll see after the Apple earnings and after the Fed decision tomorrow, a substantial move higher in Amazon could still be very much in play. And we're going to be watching that very closely because $100, $200 move in Amazon could make your account look like a rock star again, guys. Okay, so here's the series of buying the dip. Okay, things are looking a bit cautious once we get again to the upper tunnel range right here, coincided with a double top. Now it's a triple top. We've made the point yesterday to highlight that every time VIX hits 12, it bounces, and that's exactly what happened, right? Yesterday, VIX started bouncing. Next market move for today is 4, 12, or 7. Yes, we think we could still pull off a similar move like yesterday where the markets are dropping, but they're regaining the posture. They're buying the dip. Basically, people are getting out. People are getting out slightly that are scared about the Federal Reserve decision tomorrow. Overall, I think we could see a move 12 where we're opening lower, moving lower, and finishing higher, but close to the level of where we opened. So I think we have a high probability of a move 12 going into this announcement with a very third probability of being a move 7. Okay, so the markets are still positioned for the VIX to hit lows in the 11 handle on August 1st and 2nd. Numerically, VIX try to rally, right? It tried to bounce off this 12 handle, get up slightly high, 13.16, 12.8 is where it ended up. The VIX tunnel is right here. The top part of the tunnel, guys, is 14.5, 14.7. So here's the first projection that we're making on the VIX. Clearly, if the market is going to finish in the negative, like in a move 12, we could see the VIX do this. Now, maybe not today, all the way to 14.6, 14.7, but maybe today we can see the VIX at 13.6, 13.8, maybe 14. Maybe you can touch 14. And tomorrow, ultimately, get into the top part of the VIX tunnel range. Now, if we consider this tunnel range, okay, it's been working really good. Every time we get to this tunnel range of 14.5, 14.7, VIX bounces lower, the markets go higher, which would coincide that if VIX does hit this higher tunnel trading range, then it would make sense that this would be the point for you to start buying calls on the market, on the futures, on Amazon, and all that good stuff, in expectation of VIX beginning to drop and the markets moving higher. So use the VIX as your tool to time your entries tomorrow. Now, another way to look at this, guys, is the fact that, you know, all of a sudden we'll get some good news from China or something like that today. And VIX is actually showing us two head and shoulders. Last time we spotted this head and shoulder in the VIX, it actually made a nice drop and it visited this low trading tunnel range of the VIX. And then now we're noticing another resemblance of these head and shoulders, which tells us overall VIX could be heading lower. So this actually points to the fact that we could get some news intraday that could move the market into the green zone. Now, overall, okay, we don't believe that there is a high probability of some good news breaking out today. The market is in the waiting mode for the Fed decision tomorrow. So overall, we'd like to use the strategy of buying puts today and tomorrow. We'd like to close those puts by 3:45 p.m. tomorrow, and we want to reverse them into calls before 4 p.m. tomorrow, and ideally want to be utilizing the following week expiration because stocks do climb a little bit slower than they drop. So keep that in mind. Use the strategy of splitting your expirations. If we do get a substantial break higher on Thursday, Friday, then do own some expirations that expire this Friday. But overall, it would be wiser to go a little bit longer till the following week, giving the market a little bit of time to break out higher. With that said, guys, trade like a rock star. I'll catch you on the next trade tomorrow.